with education and trading. Trading Made Simple with Sandy starts right now.
Welcome back, traders. This is Sandra with Trading Made Simple. I'm here to show you short-term proven strategies. People think trading is a one-size-fit-all market. It's not. We live trade and train daily. Let's talk trading. Benzinga, I hope you guys are having a great, I should say it's almost brunch time here, right? 11 o'clock Eastern Standard Time. Looking at the Qs right now and looking like maybe this is actually has more relative strength than SPY, right? So SPY's looking like it's just maybe consolidating after a big move from yesterday. And looking at the markets today, I'm wanting to take a look at the option flow to see what the institutions right now are doing. Are they moving into SPY or are they moving out of SPY? What are the three main stocks that look really good right now? So I'm gonna go right over here. Hopefully you guys can see this okay. I'm taking a look at the top bullish and bearish flow today. So right now, all eyes are on Tesla. So Tesla, real popular this morning, but also real popular with institutional flow, right? So we have Tesla, we have IONQ, as well as MSTR. And so these are the three top bullish flows going into these stocks today. Look at the stocks that they're actually getting out of, and that's SPX, UZ, and SPY. And so I think for a Friday, this might give us just a little bit of forecasting to see what's on the horizon for next week. So right now we're in a little bit of consolidation, and that may be because people are taking profits. September is huge for institutional money moving from sector to sector. So this is when they do their rebalancing, right? And so there's typically a lot of volatility in September. And so we're going to see that continue. As we take a look again at the charts, we could see that SPY really not doing anything compared to the QQQs, right? And Tesla, right, being a main catalyst for the Qs. So let's take a look at Tesla. Wow, what a great day Tesla is having, up $20. And then I wanted to show you a couple of real simple strategies that people often talk about. In fact, I got a lot of questions in regards to these two strategies this week. So I wanted to go over this. Hopefully this will help you analyze the charts better. And so people often talk about an opening range breakout, and for short, they call it an orb. What is an opening range breakout, and how do you use it as a trading strategy? So let's get into that. So the first thing I want to show you is on a smaller time frame, and typically the opening range breakout is typically used on a 15-minute chart. So on a 15-minute chart, as soon as the market opens, you're looking at this first candle. And on this first candle, you can see that we have the 15-minute high and we have the 15-minute low. And what this represents is an easy trading strategy, especially if you're a detail-oriented person that gets lost in the analysis sometimes, or you might be new and this is just a little too nerve-wracking for you. This is a real simple way that you can keep your mind focused and identify what's happening on the chart. So let's take Tesla as an example. If we look at the Tesla high and the Tesla low, you could either make a drawing here and just put that on here as an example, and then you're going to do this for the low. When price breaks above that high of the first 15-minute candle, we're going long. That's as simple as it can be. And if we break below that first 15-minute candle, then we're going short. And as you can see, the first 15-minute candle breaks and we end up going higher. And that's how simple this strategy is. That's a very popular tradable strategy. Some traders like to do this on a 5-minute. Let's take off this drawing here. And so as we take a look at the first 5-minute candle of Tesla, excuse me, and we make that drawing, if I can make that straight, somewhere around there, you could see that as soon as on a 5-minute candle, we break above that opening range, which is this 5-minute candle, we go higher. And that's really a simple strategy that you could utilize if you're looking for either a breakdown or a breakout is just to use that 15-minute candle or the 5-minute candle. Now, some people will look at that 1 hour chart because the 1 hour chart is really valuable for experienced traders. And they tend to look at that 1 hour chart and identify that opening range breakout in a 1 hour and think, are we going higher than that 1 hour time frame on the chart? And if the answer is yes, then we could see more movement in the next day or two. And so that's where we are today, even on a 1 hour for Tesla. And I will tell you, Tesla has a lot of high conviction trades coming in, big whale trades coming in from institutions. I've been seeing the orders constantly coming in for Tesla. So we'll have to see if Tesla ends up either consolidating or starts to accumulate next week as we see all these orders come in. This is basically the opening range breakout in a very simple way to understand it. And you can start utilizing strategy on any ticker. The other one that I wanted to talk about, and that's why I have my after hours on, is let's go over to SPY as an example. Let's talk about the pre-market levels. Why are the pre-market levels important to traders? Let me just tell you that every day, right, we're either going to range trade or we're going to have a breakout or breakdown trade, right? Those are the three options that we're going to have. But how do you measure that? And so when we talk about measuring a move, we need to talk about what's happening overnight. Because overnight you have other markets, the Europe, London, those markets are already in session. Asia market, they're already in session. And so as things are developing in other markets, that affects our stock market here. And so we use those overnight levels to help us identify a range. So let's take a look at that. So as you can see, I do have an indicator, by the way. If you're interested in this pre-market low, pre-market mid, and pre-market high indicator, just shoot me an email, Sandra@tradingmadesimple.org, and I'll get you that indicator. But what this shows you basically is what was happening during the pre-market session of the morning. And what it does is you have to have your pre-market levels on, right? On your charting settings, you have to have that on. But once you do, what this will do is basically identify during the trading day what your high, mid, and low is. So technically, if we were to look at this, is we would see that mid basically equals point of control, right? It's the point of control between the lower end and the higher end of where price traveled pre-market. And what this serves is that when we open, unless we break out of the pre-market high, or unless we break out below the pre-market low, we're in a range. Could that help you as a trader identify maybe the type of trade that you want to take, or the type of strategy, type of trade vehicle that you want to take? So this really then shows us for today, what is the range? And then are we breaking out or are we breaking down? And then, of course, that analysis helps you to identify a trade. So on SPY, you could see that we broke above the pre-market high. We're now coming down to test it on a 1 hour. If we look at this on a smaller time frame, like a 15-minute, you could see that we broke above it. And again, we're still here retesting it. Now, what I like to do to eliminate fake outs is to have one candle on the time frame that you're looking at be actually away from that level. So if the pre-market high level is right here at 658.13, I want a candle to be away from it, not laying on top of it for that time period. Let's take a look at a 5-minute and see if we can see something a little bit better. So on a 5-minute, you could see our pre-market high right here, and you can actually see on the 5-minute a break below it, right? It's a break below that level, and it's clean, it's not touching it. That to me is an identifier as well as momentum, right? Be careful of momentum, guys. You can see that on a 5-minute, momentum is positive and it's curving up. But if you were just taking the fake out alone, Just take a look at the candle and think, for that time period that I'm trading, do I have a confirmation candle that is below that level or above that level? And then that will give you more confluence to make your decision. And I would just add, of course, momentum, because momentum drives the price. So if you were just focused on the top part of the chart and not really focused on the bottom part of the chart, then you're not seeing that momentum is above zero. And right now it's toying with that zero line. Now, like a wave of energy or in the ocean, when the wave goes down, right, if it starts to come back up, where's it going? It's coming back up to make another wave. And that's how I really look at this indicator. This indicator is an indicator on ThinkorSwim called the CCI. It's an old school indicator for momentum, but I love it. It's so easy to read. And so as momentum then is staying right here, you're on the fence as well as, hey, is this going to break below that zero CCI? And if it breaks below zero and you have a confirmation candle underneath, you could see that this one touched it again, didn't it? Still toying with the pre-market high on SPY on a 5-minute. So what we're looking for is either this is going to be curving up or it's going to break that threshold at that zero line, which I have it colored as gold here on my chart. And then what you'll be able to see is a confirmation candle below that, and then we're back into a range. Because if that's the range and we just peekabooed above that pre-market high and you went long at that candle, then what happens? The next candle, you're coming back down again. And so really what you're trying to do is develop a strategy for yourself so that you don't enter these trades during this time period. You want a confirmation level that'll get you into the trade with confidence that, hey, I have all these pieces of evidence that lead me to believe that this is going to go higher. And one of those is this little fake out. I don't want to be faked out into this trade if it's going to constantly just be going sideways. I really need the break above the pre-market high with no candle laying on top of it. I need a fresh candle that's above it. Momentum is high on a 15. I have price that already broke through it, but it keeps coming back to retest it. I really need a candle that's away from it. And as soon as it is away from it, you'll have more conviction with your trade thesis to go long. So those are the two strategies that I wanted to talk to you about. Very simple strategies that you could start playing with. Of course, simulate before you go live always is helpful. Now let's go ahead and talk about those 3 stocks that were looking good. We already took a look at Tesla. And Tesla right now coming up into some 15-minute resistance. Let's take a look at a day chart, see what we're doing here. So as you can see, we have a Darvas consolidation band. This is where Tesla was just really in a range for quite a while. We could see that today, on the 11th, actually, we broke out of that. And then from the breakout, got a nice daily candle away from that consolidation resistance, right? Giving you what? Confirmation. Because it doesn't matter if it's on the pre-market high or straight support or resistance level. If you're looking at a specific level that's important to you, you're really just looking for a confirmation candle to break out of that. As you can see, we are broken out of that and it's looking really good. We saw some institutional flow into Tesla and this looks really nice. You could see a nice breakout candle here. We are entering some resistance, but let's take a look at the weekly now and so see what we got going. We had a previous high here, as you can see, back in December, and we've been making our way over there. So as we break above that consolidation band, we're hitting a little bit of resistance level right here. But if we can break above that, you can see us go all the way to what? 488.54. That was our last pivot high before we broke down. Isn't that a level that they'll be looking at? Absolutely. So this is something to take in consideration that we got Tesla's on a breakout right now, and it could go into a continuation. Now, what typically happens when we have a huge breakout day? We typically have a lot of consolidation. And so I want to make you aware of that because a lot of people will miss the breakout. They missed that breakout. And then they just dive in with a full position, thinking that it's going to have a continuation immediately right after. And I think what a better strategy could be is building a position if you miss the initial breakout. So if you miss the initial breakout, you weren't looking at this before, you weren't looking at institutional flow to see that money was constantly going in this week for Tesla, then what you could do is say, Tesla just got a breakout from a very important zone. I think I'm going to start a position here. You could do one of two things. You could wait until it comes down and retests, right? Because that's always the stronger. Let's look at that on a day. So you could say, okay, here was the last pivot high at 367.39. Could I wait for Tesla to come revisit that level and then do a long? It's a really strong position when you do it that way. Because more often than not, price will come back and retest that resistance level that they just broke through. So instead of you thinking or maybe pushing or being too quick to get into a position that's already been on the breakout level, you might want to think, which is a smarter way of thinking, hey, look, can I get back into this? I missed this stock, but I want to get back into it. What would be the best strategy for me to get back into this? And it would be the retest of resistance. Because you can actually see the level, you can actually create a trade that says, I want my platform to automate this trade when price gets to 367, and then I want to go into a long call. How would you do that? So let's go ahead and practice that right now, guys. If we go over to the Tesla, let me just write that down. So you could see that our level's at 367.71. I'm going to make it 368. And the reason is because oftentimes price will just get so close to it and it like satisfies that urge to come and test that resistance, especially if there's a lot of strong momentum. And so because of that, I typically pad my automations. So here I'm going to say just a little bit above it at 368. You could see that green flag right here, guys. 367.71 is the level, and I'm just padding it by 30 cents and just saying, hey, look, if price comes down at 368, I want to get into a long call. And then that will mean that I don't have to keep checking my charts. The automation is going to do it for me. I have this strategy in mind because I already talked about it, right? And I'm already like examining the chart work. What often ends up happening to a lot of traders is they'll do all this work on charts and they'll put a whole bunch of alerts in or write down a lot of notes. And then when the event actually happens, there's so many alerts that are going off that you get desensitized as a trader. And so that's why when you look at a chart and you create a strategy, it's better just to go ahead and automate that strategy. You can always change your mind later. If there's a news event or whatever, you can cancel the trade. But here, clearly, I'm saying, hey, look, if price comes down to 368, I want in. And what happens if it breaks below, as an example, a certain level? You could just say, hey, look, if it breaks below, if the entry is 367.71 and I'm entering it at 368, I could give this like 25 cents, 30 cents, right? If I really wanted to be narrow with my stop loss and say, as soon as that gets in, if this goes down 25, 30 cents lower, then we're back into this consolidation range and I don't want to be in this trade. So we're going to get into it at 368, but if it goes down to 367, I'm out of this trade. So let's go ahead and automate, guys. Because I don't know what next week brings, I'm going to give myself a little bit of time. So instead of just a weekly, I'm going to give myself 2 weeks because we could have an entire consolidation week next week. So as I come over here, I can either pick one of two strikes. I can either pick the entry strike, which would be 368, because at the time that it happens, it will be an at the money strike. Or if I look into the future, I can pick that as a strike as well to see where my target is. So right now, I think I'm just going to go up $1, down $1 just to make this simple. 368 is our entry trigger. Looks like we have a 367.5. So I'm going to go over to the call and I'm going to right click it and say buy custom. And when I say buy custom, I'm going to do an OCO, which gives me a buy order and 2 sell orders. One of the sales is for your profit, one of the sales is for your stop loss. So from here, I'm just going to go over to this gear icon. And when I take a look at the order rules, This whole order rules section is really based on the bottom portion of this, because all of this you can do from the front side of the platform. So it's really this that's really important. So here, if I just click under the bar, you can see that it fills it out by default already. So it's defaulting to Tesla, it's defaulting to Mark. Now these triggers is above or equal to or below or equal to. And I'm looking for the below or equal to, which is the first one. And if you're not good with those triggers, you could just go down here and you can read it. And you'll see that if I say above, it'll say greater or equal. If I hit below, it says less than or equal. And then I'm going to come over here and then put in that price for Tesla. And that was 368. And you need the tab out of this box so you can actually see the programming on your screen. If you don't, it won't go in properly, just letting you know. So we have Tesla at or below 368 to get me into what? A long call of 367.50. Because we're using the stock price to enter this trade, I don't want to use an option price. So here we come up and we just say, hey, look, I'm going to be an aggressive buyer of this option, and I'm going to pay the ask. Typically speaking, Tesla has very narrow bid and asks, especially at the money. So because of that, I'm just going to say, hey, look, I'll give you the ask, and that'll be it. And that's why this is a 0-0. It's just telling the computer, hey, look, when this gets to 368, get me into a long call, and I'm willing to buy the ask. And then you save it. And that's all you have to do for that order, to be just waiting in the wings for that to happen. So if we get a gap down low, who knows what the news will bring this weekend, we might get an entry in there. And then here, we're just going to say, hey, look, and we're going to do the same thing for the take profit. We said $1. I think I might go a couple dollars. We didn't take a look at the chart. Well, we have a little bit of time. Let me go over here, take a look at the chart. Typically speaking, if we're here, we already came up to, this is a resistance level 382.94. I'll make it 382. That'll give us some nice profit. All right, getting back to the trade here. So now we're going to go over to the take profit. And how do I know that's a take profit order, by the way, guys? Because right here, you can create these any way you want. You could do them opposite if you wanted to. That makes no difference. But the first one that they give you says a limit. And that limit is basically your take profit order. And you see how the second one is a stop, and that's your stop loss order. So you could just use them in that same rotation, or if you wanted to change it up, you could, but just letting you know what they give you. So we're going to go Tesla. We're going to say greater or equal to, and you'll see it says it right down here. And this is our take profit. So we're using the 382 level for Tesla. We've already been here before. We could easily go back to it. And now we're going to sell the bid. We don't know what the option price is going to be, but we're going to sell the bid, which means that you're just being an aggressive seller. And you see how the platform already adds like $1. You don't want to sell the bid plus give them an additional $1. So what we're going to do here again is just put 0-0. And now, make sure I got a good till cancel. But here now you have, let's make sure that the price is greater or equal to 382, and that's getting out with our profit. Sell the bid, 0-0. We're on our way to this order almost being completed. So now that we have that, and remember I forgot to do good till cancel because, on a day, if you leave it on a day, then it will just evaporate at the end of the day today. And so you'll want to make sure you put good till cancel because this is an automated order. You don't know when it's going to trigger. Now, for the stop loss here, we're just going to say, hey, look, when Tesla gets below, and that's the top part, we entered at 367. If it goes down to 366, tab out, make sure less than equal to. We're going to, this one is a stop. So anytime you have a stop, it's a market order is what we call that. So we're going to put this on mark. We're going to make sure this says 0-0 because this is going to be a market stop order when it goes down to the 366 level. So now I'm going to save it. And basically what we're doing on Tesla is we're saying, hey, if Tesla does basically a retest of the resistance level it just broke through today, I'm going to go back in because I believe that Tesla has more room to run and it really is just retesting, which 80% of stocks do this all the time, guys. If you're looking at probabilities, if stocks come down to retest the last resistance level they just broke, this is really your best entry. So with that in mind, we're saying let's get in. And then if it drops below just $1 on Tesla, we're out. I'm saying I want to keep my risk low. If it goes below 366, I have a stop loss. If I get into this when it comes to retest it, I'm going to the 388 level, which we've already tested before, which is considered resistance. So now, hopefully that is nice and clear, making it simple to automate a trade on Tesla, especially when you're looking for a reversal. There's a lot of traders out there that really like the reversal trades because they recognize that this is the better and stronger trade to make when it comes down to retest it. So on breakout days, you could go through this, pick 3 to 5 of your favorite stocks, look for the reversal, look for the resistance level that it broke or the support level that it broke, and then automate a trade just like this. I hope that helps you guys. When we do this, you'll see that my programming didn't let me push the button. You can see that it's grayed out. You got to make sure that your good to cancels all line up, okay? And you got to make sure that depending on how many contracts you have, all line up. And then now we do this, we just take a look and read our programming is what we're doing, right? We're saying, hey, look, buy Tesla, this long call at 367.50, which will be an at the money at the time Tesla goes down to retest resistance, when Tesla gets at or below 368. Now, when Tesla goes above 382, get me out with profit. And my stop is set below 366. Always have to be cognizant of your risk amount because really as a trader, that's the most important thing. You want to limit your risk by looking at a potential gain. Guys, I'm out of time. I hope you have a great weekend and we'll see you next week. TradingMadeSimple.org.